before I get into the topic, I do want to share with you a few things that are just in the, just what's happening in the marketplace. There's actually a lot going on. I know we kind of fell away from it, but today, I'm taking over, so I want to cover a few of the stuff. So I'm going to share you my screen as we go over it real quickly, as this stuff matters to you guys. Number one, you guys heard of Better Mortgage, right? They've been marketing like crazy. Do you guys all hear about the new AI platform that they launched? Okay, what this is in short, I'm just going to summarize it. They're basically powered with or AI company has powered with Credit Karma, rather has partnered up with Better Mortgage, and they basically created this AI system where customers can input an application. The AI will run their scenario, run 40 different lenders' rates, and recommend the best scenario at the best rate possible. Guys, this is what we call disruptors, okay? Disruptors in our industry. You and I are talking to clients. There is another client that's probably talking to AI, right? And getting quoted the best rate that they can through, just through a platform, through a simple application. You guys understand, right? And I've been saying this for years. Whether you believe in AI or not, or it's going to end the world or be the best thing since sliced bread to this new world, in mortgage, when it comes to mortgage, it will be a disruptor, okay? It will be a disruptor, especially for those who are W-2 earners, maybe not so much a self-employed borrower, but for those who are wage earners, simple, primary residents, we already can approve loans within 10 days, right? Now think about AI and the front end of it, right? The application process, the rate quoting, the submission, the registration. It's gonna get easier, guys, out there. If you don't think this is real, well, look, hate to share with you, it's getting real, okay? Second thing I wanted to share with you guys, not DSCR. There is an uptick in DSCR, but I don't want to say that. Just really quickly, you guys have heard me already talk about it, but expect, they could potentially downgrade the rates, guys, just because of inflation. This is tough times, guys. That's just reality. Don't be, ignorant of, nor don't just dismiss it as well, guys. I'm sure you guys feel it at the gas pump, at the grocery store. That affects, yes, our cost of living in general. When it comes to our profession and our business, yes, that means higher interest rates, as we are seeing now. This one's really big, I think. So they're going to pass perhaps the largest mortgage industry legislation since the Dodd-Frank Reform Act. Okay, and just to kind of show you what it is, I'm going to actually share you my ChatGPT summary. Okay, what it is, guys, is they're trying to boost supply and make things more affordable. Okay, a lot of it stems from, simply, if you want to summarize it, is going to be new construction. There is going to be, so a couple things. They're going to try and limit. So right now it passed like 80 to 10, I believe. Okay. So they're making some revisions before they submit it to the president for a final approval. But here are the key provisions here. They're going to restrict, they're going to restrict any investor that has 350 properties, investments, and 350 single homes from purchasing anymore. Some relief. I don't think this was the big one. I wish that 350 was like, they took away the 5 and the 0. I don't know if you guys agree with me, but look, there are big conglomerates out there. There are major investors out there, right? Not just banks alone, but how many REICs do you guys see out there? Real investor, or REITs rather, REITs, right? There's a lot, right? And 350 is small from that standpoint, but for us to really, really win, I think, your homeowner, I don't know if you're one of them right here on this call, and no offense to you, but how many of you guys own a home? And if you don't, how many people do you know that own 3, 5, 10 homes, right? well, they're your competition too. They're preventing you. So I get it from an institutional level, the 350, but that should help there. Small dollar mortgages. You guys do know that there is a high cost that the rule that comes into play, especially for mortgage loan amounts. You see 90, 100, 120, $150,000 because of Section A fees and title fees and stuff. You can't do it, right? It could potentially hit what's called the high cost price mortgage loan, and we just can't do it. So we have to either reduce the underwriting fee or whatnot. But they're going to try to make that a little bit easier. Okay, there are some lenders, you guys know this. They have minimum loan amounts. They won't even touch anything lower than 125. It's been a while since I've done it, to be honest. I mean, we're in Southern California, but to service those in the rural areas or people who want to come in with super large down payments, yeah, this does affect them. Manufacturing, this is huge. I think I've said this in the past calls. They are really trying to focus on manufacturing housing. Okay, that is something it was a takeaway for you guys for a few weeks ago. Mobile homes and manufacturing, I believe too, is a niche if you want to, as a loan officer, to focus on, right? Especially with AI. AI is going to really replace what type of jobs, guys? You think it's the blue collar jobs, but it's not. It's going to take over the white collar jobs first. Okay, that's where the meat is, right? In any company, the highest cost. If they can replace that while keeping their workforce to produce more, they will. But unfortunately, in Southern California, when your home prices are what? Average home prices in Orange County, 1.1, 80, 90,000. But can your $150,000 earner afford $1 million home? No, right? And so it's your white collar jobs, 200, 250, 300 up, okay, who are losing their jobs, can't afford the homes in Orange County now. And that's really our buyer. Where do those other buyers turn to? Manufactured homes, right? So there has been new developments in San Bernardino County, Hemet, Menifee, those areas. Just drive down there, guys. There's manufactured homes being built. Stop on by, give them your card, tell them what you do. I won't go over the rest, but yeah, there is a huge mortgage act that they are trying to pass. We'll keep you informed in that, as I will be staying on top of it. Finally, this is the last thing I wanted to share with you guys. This has been actually in the talks for about a couple months, okay? The central bank is, okay, and I think will relax requirements, especially the reserve requirements on banks. Guys, I came from the banking world, right? C did too. There is a lot of red tape with the banks in doing mortgage. That's why C and I no longer work for the banks, okay? You have Fannie, Freddie, what you know of here, being at Giving Tree, at a non-del, or even at a direct lender. Well, at the banks, there's a lot more fat that you have to cut through. Fat meaning guidelines, okay, overlays, that prevents the loans from being procured that we would do here. There's a lot of loans that we can't do at the banks. Well, they're trying to, a lot of it does hedge on reserves, capital reserves, right? The banks just need more of it, just in case there's a risky loan that gets what's the word I'm looking for, gets bought back, defaults. So they are trying to remove some of that or lessen it. You guys know, how many of you guys here has in the past year or two, especially since the pandemic, has met a homeowner that used a bank to get a mortgage? I can bet it's a lot less frequent now than it was prior to COVID happening. Okay, before COVID, especially during the late 2010s, many people were using banks. But what happened was, as they experienced the overlays and issues at the banks, they started going to the direct lenders. That's why we have companies like Giving Tree and other companies like Giving Tree, non-del correspondent lenders, because people were tired of going to the banks because of the restrictive guidelines. They're trying to undo that now. So banks, believe it or not, didn't even represent, okay, did not even represent 13% of mortgages done in America. Can you guys believe that? That's insane. They barely had 15% of the market rate or the market cap in mortgages. Well, the government's intervening now to make it better. That's more troublesome for you guys because you guys know, right? Banks can at times offer the best rates. So these are things just be aware of as it affects your business day to day. Okay. Finally, before we get on, and I promise we'll have enough in time. Just this morning, something came through, and I was just like, "Holy smokes, that's crazy!" Who here has heard of or used Champions funding? Anyone? Do you guys remember Champions coming on? It's been a few weeks ago, right? Yeah, on. They just came out with a new program. Here, I'll show you my screen. Owner occupied no ratio. All right. So I've done one with Change Wholesale. Okay. Literally, no income, no assets, no income, no employment, no VOE. Just an appraisal and an appraisal and reserves. And the cash out could be the reserves. But Change, I don't know what it is now, but they were capped at 75%. In my case, my borrower was a $3 million property. They were capped at 65% LTV. Okay. But I think that the program, if it's under $1 million, does cap out at 75. Here with Ally, it's 80%. Okay. 80%. So as it says here, there's a flyer here, guys. I'll open that up. No income, no employment verification. It does go up to 80% with a 720 FICO score LTV. Okay. There are reserves. So if you go into their matrix, I don't know if you guys all got this. I'll share this real quick, guys. Okay. 80%. If it's greater than 75% at 80%, obviously you'll need 9 months reserves on a purchase. So you got a cash intense buyer, guys, or cash heavy buyer, but they want financing. They don't want to go through the hoopla. This is something I don't know what the rates are. Do expect it probably it's going to be somewhere in the mid 8s, maybe even higher. I don't know, maybe low 8s. Expect to pay a point or two. But look, if you just need you got someone who has great credit and lots of money, but they don't want to go through conventional financing, and they need a loan. Here's a consideration, guys. Okay. Couple things that stood out to me with this product: non-warrantable condos are allowed. Okay. Another thing here it is. It's in red actually. 100% of reserves can come from a cash out. So if you are doing a refinance or cash out refinance, the amount that's refinanced out, the equity, okay, that in itself can be used to qualify the reserve requirement, meaning they don't have to have another 9 months of reserves in the bank or checking account or an investment account. So this is actually a good opportunity for someone who needs extra cash. If they have a low LTV right now or paid off home and they're trying to start a business or whatnot, and they don't have the funds necessary right now, this is a great option. Any question here, guys? No? Well, VA Earls, go sell it. If your pipe is low with nothing to maybe just one, here's another one here. If you need to step up your purchase game and need to meet agents, go sell a manufactured home, guys. There's no shortage of business, despite that's what everyone wants to say. Okay.